Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 27th of September 2020, and we're talking about India and why its temples are being indirectly forced to hand over its gold to the government, and what implications for the gold price moving forward this could have. So let's take a look. Now, before we look at what Indian temples are doing, we wish to plug yesterday's video entitled Gold and Silver Weekly Update for the week ending the 25th of September, where we not only highlighted the past week's market performance, but also suggested why some analysts believe that precious metal prices may actually bottom next week. And we've placed a link in the description box below where you can access it if you haven't already listened to it. Now, we've also noticed today an article published late on Friday by Bloomberg, which is very short, and we shall read it to you because it nicely encapsulates what happened last week to precious metals, and it does have some bearing on what we're talking about today. So let's just take a look at that article. Bloomberg article dated September 25th, 2020. 10:51 p.m. GMT+1. Headline: Gold and silver have worst weeks since March on rising dollar. Gold and silver posted their biggest weekly losses since March, when the global onset of the coronavirus pandemic panicked markets. The dollar gained as concern over the outlook for global economic growth bolstered the appeal of the currency as a haven, sapping demand for gold. Fears are mounting that rising coronavirus cases, particularly in Europe, may lead to more national lockdowns, denting the outlook for recovery. Gold fell 4.6% this week, while silver slumped 15%. Both have succumbed to belated long liquidation and pressure generated by the strength in the general dollar index, which is on track for its biggest weekly gain in almost 6 months. Edward Mayer, an analyst at ED&F, Man Capital Markets in New York, said in a note. The rally in gold, often used as an inflation hedge, has also flagged, as the dimming view of the recovery undercuts the outlook for a rise in consumer prices. A lineup of Federal Reserve officials have said the central bank alone cannot boost prices, and the economy would falter without more aid. Gold has fallen more steeply of late than currency exchange rate developments would have led one to expect, said Commerzbank AG's Carsten Fritsch. Abating concerns about inflation due to rising corona numbers could have something to do with this, Fritsch said in a note. US House Democrats have started drafting a stimulus proposal of roughly $2.4 trillion that they can take into possible negotiations with the White House and Senate Republicans. The bill could get passed by the House next week. Spot gold fell 0.3% to close at $1,861 an ounce at 5 p.m. in New York. Silver slipped 1.1%. Platinum also declined in its worst week since March, while palladium had the biggest weekly slide since July. The Bloomberg Dollar Spot Index climbed 0.3% and registered its best week since April. Gold's slump could prove temporary, with increased uncertainty over the US presidential election. Any added conflict in the run-up to the vote should help lift the precious metal, according to RBC Capital Markets strategist Christopher Looney. The US election cycle and any potential transition, as well as heightened geopolitical tensions, remain amid economic uncertainty, he said in a note. The recent moves open up room for gold to move higher more materially in the next 2 quarters, he said. Good. So the essence is that the coronavirus, plus of course the US general election due on November the 3rd, has already impacted markets and will continue to do so. Bloomberg seems to suggest that we can expect a jolt upwards from here in the gold price and silver as a consequence because of the level of uncertainty these areas have created. And broadly, we agree with that thesis, though we cannot rule out that a strong data set this coming week could, at least very short term, dampen precious metal prices, which then could be buoyed again when a stimulus package is announced. Now, that aside, what interests us today is India. Now, we have to admit that India is providing us with mixed messages, especially with regard to its economic performance and deep concern in relation to COVID-19, where recently it is surpassing the United States in daily deaths, which are in excess of 1,000 a day, and the number of infections appear to be averaging somewhere in the region of 80,000 plus a day. Now, many thought that India was beginning to recover from COVID-19, and this now is being questioned. So you may ask why we bothered, particularly about this rise. Well, the answer simply is its potential impact on India's demand for gold, and what effect that could potentially have on the global price moving forward. Now, we all know that India is one of the largest importers of gold in the world, and according to the World Gold Council, it had a recent record month in August. But that said, year-on-year statistics are placing other countries ahead of India in the importing stakes. So let's take a look at a brief article showing the table for gold imports for 2019. So let's take a brief look at worldstopexports.com, which, dated July the 2nd, 2020, highlighted gold imports by country. Some of this may surprise many of you. Worldwide purchases of imported gold totaled an estimated $306.2 billion in 2019. The overall value of gold imports rose by an average 21.7% for all importing countries since 2015, when gold purchases were valued at $251.7 billion. Year over year, gold imports increased by 0.1% from 2018 to 2019. From a continental perspective, European countries bought the highest dollar worth of imported gold during 2019, with purchases valued at $145.5 billion, or 47.2% of the global total. In second place were Asian importers at 45.7%, while 5.1% of international gold buys were delivered to North America. And if we look at the top countries, number 1, United Kingdom, 70.8 billion, representing 23% of total gold imports. Second, Switzerland, 60.7 billion. Third, China, 43.9 billion. And then India, 32.2 billion. Great. Now we shall take a look at what the World Gold Council has recently published, particularly in relation to India. World Gold Council, Gold Hub blog, dated 24th of September 2020. Headline: India's gold market in August. Indian imports hit 9-month high, but retail demand remained weak. Summary: the domestic gold price decreased by 4.4% month on month, but ended the month 31.1% higher year to date. Economic indicators sent mixed signals during August, suggesting that the Indian economy is unlikely to witness a quick recovery. Foreign institutional investors' inflows into Indian equities touched an all-time high of $6.4 billion, and the US dollar Indian rupee appreciated by 1.6% during the month. Retail gold demand weakened as consumers waited on the sidelines following a sharp correction in the domestic gold price amid rising COVID-19 cases. Demand for safe haven assets and strong year-to-date performance, coupled with a price correction likely seen by investors as a buying opportunity, supported gold ETF flows. Total holdings for Indian gold ETFs reached 25.7 tons at end of August, a net inflow of 1.8 tons during the month. The Reserve Bank of India added 33.2 tons of gold to its reserves between February and August 2020. Cumulative rainfall between June and August was 9.8% above the long period average rainfall, with Kharif sowing 7.2% higher than last year. So, economic indicators sent mixed signs in August. As lockdown restrictions have gradually eased, some indicators have started to show recovery in economic activity. India's Manufacturing Purchasing Managers Index rose to a 6-month high of 52 in August from 46 in July. Retail sales of tractors improved in August, 27.8% higher year on year. Nomura India Business Resumption Index rose to a post-lockdown high of 75.7 at the end of August, up from 73.4 the week before. However, other indicators still point to weakness in the economy. India's power demand continued to be marginally negative in August, 0.9% lower year on year. Average daily e-way bills stagnated at 1.6 million in August. GST collections in August totaled 864.49 billion rupees, 12% lower year on year and 1.1% lower month on month, and consumption of petroleum products remained negative in August, 16.2% lower year on year and 7.5% lower month on month. Thus, key activity indicators present a mixed picture, with some showing signs of improvement, while others moderated. This indicates that the Indian economy is unlikely to witness a quick turnaround. Retail demand suffered as consumers waited on the sidelines. Bullish momentum in the international gold price paused after it touched an all-time high in early August, with increased global economic activity and the rally in global equity markets. The gold price faced headwinds and was further impacted by an announcement from the Russian government about the development of the first COVID-19 vaccine, Sputnik V. As a result, both the LBMA gold price and MCX gold spot fell sharply by 4.9% and 5.3% respectively between the 10th and 12th of August. With INR appreciating by 1.6% and the Indian government 10-year bond yield strengthening by 28 basis points, the MCX gold spot fell by 4.4% in August compared to a 1% fall for the LBMA gold price AM in US dollars. Retail demand, particularly for bars and coins, was strong until the 10th of August, gaining momentum as the gold price rose. Once the gold price corrected, consumers opted to wait on the sidelines to watch the future trajectory of the gold price, halting further purchases. This was exacerbated by rising COVID-19 cases in India. With such a weak sentiment, retailers in Kerala reported 40 to 50% lower year-on-year jewellery volume sales this Onam. And as you can see here, sharp fall in local gold price and recurring lockdowns dented retail demand. I wish to draw your attention to India gold imports. India imported 58.5 tons of gold in August. Indian official gold imports reached a 9-month high of 58.5 tons in August 2020, although imports were more than double those of August 2019. Year to date, they remain very weak. A total of 10 banks, nominated agencies and exporters imported 48.2 tons of bullion during the month, and 17 refineries imported 10.3 tons of gold ore. Looking at imports data, in August, 70% of the official imports landed in India during the first 2 weeks of the month, when the retail demand was strong following a sharp rally in the international gold price. Further, out of a total of 58.5 tonnes official imports in August, 16.5 tonnes were imported in Sri City Free Trade Warehousing Zone. These imports landed in FTWZ with an expectation of strong demand in August, which failed to materialise after the correction in the domestic price. Those imports are expected to move to the domestic market when demand improves ahead of the wedding and festival season. So broadly, this looks positive for gold, but an article, which we shall read in a moment, published by Bloomberg Business Magazine this week, reports, and this is the essence of today's video, that Indian temples are, due to COVID-19, being forced to deposit its gold holdings with banks in order to earn interest so that it is able to pay necessary bills due to declining donations. The article is a few minutes long, but it's really worth listening to. So here goes. Bloomberg Businessweek magazine article, week commencing 21st of September. Headline: Using God's Gold to Pay Pandemic Bills. With donations down because of the health crisis, Indian temples are tapping their troves of the precious metal. Collectively, Indians own the biggest private stash of gold in the world, and religious adherents have long donated gold to temples, often to honour deities associated with individual temples. Over the centuries, that's made the country's 3 million religious houses some of the world's largest holders of the precious metal. But now India's temples, shut for months because of the coronavirus pandemic and deprived of donations, are being forced to consider depositing some of their famed stashes of gold with banks to pay mountain bills. Hindu temples hold as much as 4,000 tons of the precious metal, according to the World Gold Council, a stockpile as big as Fort Knox's and administered by trusts empowered by Indian law to act on behalf of the deity. The Travancore Devaswam Board, a prominent temple association in the southern state of Kerala, has for the first time decided to deposit some of its treasuries with banks, which pay interest on gold deposits of varying terms, to raise funds and pay salaries, according to the board's president N. Vasu. The Mint, an Indian financial newspaper, has reported that the Travancore Trust spends about 500 million rupees, or $6.8 million, each month on salaries and other costs. There is some opposition against using God's gold to pay wages, Vasu says, but we took this tough decision because this is one of the toughest periods we have ever faced. The Travancore Trust, which governs 1,248 temples, including the Sabarimala Shrine, a major pilgrimage destination, is looking at putting about a ton of the metal in government-sponsored gold plan. It expects to earn interest of about 100 million rupees. A final decision will be taken only after inventorying holdings and evaluating opinions from devotees and bankers, Vasu says. The trust won't monetize any gold used in daily rituals or ornaments that adorn the idols, he says. It's also petitioned the local high court for necessary permission to deposit its gold. Gold is an emotional investment for Indians, and the temple's willingness to free their hoard from ancient vaults will confer much-needed legitimacy on banks' efforts to get people to monetize their personal holdings of the metals, said N. Anantha Padmanabhan, chairman of the All India Gem and Jewellery Domestic Council. More gold in the market will mean the government won't need to import as much, conserving precious foreign currency and preserving the value of the Indian rupee. India imported a walrus's weight in gold every day in 2019, totaling about 647 tons for the year, about 60% of which is used to create jewellery that's often given as bridal gifts. Although UBS Group AG forecasts that demand for gold could fall by more than a third in 2020, as millions of citizens lose their jobs because of the pandemic, authorities could divert household savings towards more productive uses if they can persuade people to recycle gold. Indian governments have been trying to do so for decades. The latest attempt came in 2015 when Prime Minister Narendra Modi announced a program where people can deposit gold with banks and receive interest payments. On maturity, they can choose to be repaid in gold or in rupees. The problem with the plan is that all the metal gets melted down to check for purity before being resold, which means depositors can never get their beloved heirlooms back. Official data show the program collected only 20.5 tons from temples and trusts, mutual funds, gold exchange traded funds, and others from its start in November 2015 to January 2020. A pittance compared with India's 700 to 900 tons of gold imports. The gold of the temple belongs to the gods, says Preya Gopalakrishnan, a former president of the Travancore Devaswam Board. Historically, governments used to exploit gold and land reserves of temples for their own revenue streams, leaving temples high and dry. If the temples want to use gold, there should be a sound legal framework that is as strong as traditional covenants. Modi's government held talks in August with top gold trade bodies and the biggest jewelers to find out how to make its gold program more popular, Padmanabhan says. Not everyone is convinced it will work. India's deep-rooted connection with gold suggests that a fundamental shift in mentality and attitudes is needed before people can come around to recycling it. Analysts at UBS, led by Tanvi Gupta Yain, wrote in an August 25th report. And this could take generations to play out. So what are we expected to make of this? There is no doubt that gold prices will benefit from any additional stimulus injected into world economies. However, we can see that when gold hits certain price levels, demand falls. And if there are more business closures and shutdowns worldwide, there is no doubt people will be more focused on paying their necessary bills than investing in gold or anything else for that matter. What interests us is, will the Indian government, now finding its coffers filling with gold, currently held by its temples, will it be so desirous to continue importing gold? You see, we could have a double whammy here. Businesses such as the jewellery industry may cut back because of lack of internal demand, because of the COVID-19 pandemic, and the Indian government may cut back because of potentially hefty deposits into its vaults. Now, of course, no one can predict the outcome, as there are so many variables, many of which change dramatically. But nevertheless, it is yet another development worth watching out for and taking into account. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. And if you haven't already done so, please subscribe to this channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.